Hey traders, Raghi here, and the market just closed a bit ago, and I'm taking a look at the after hours action as we go into the Asian session and what transpired throughout today's trading session. Most of our positions that we put on, whether they be pound shorts, Aussie buys, Canadian dollar buys, for the most part, especially emphasizing the Australian dollar buy, Canadian dollar buy, and the yen shorts. These are really risk-on positions, meaning that we're going to benefit from overall the move higher in equities. And that's what I want to talk about here tonight in the free video. And we're going to take a look at the Dow first because this is a really important level in the Dow. Now, what I'm giving you guys, quite frankly, this is the beginning of the premium video that I'm recording for Simpler Forex members. I think it's just that important. And I want to make sure everybody has a chance to consider this and what the ramifications are for your positions. And it's not a matter of, I want you to bail. It's not a matter of, I want you to go ahead and take the short side of the risk environment, meaning, say, shorting the Dow or the S&P. But I want you to consider the what if. I want you to consider what happens between 17.5 and 17.6. And if we were to exhaust, if we were to stall and then reverse, head lower, how you would manage that in terms of open positions. I'm going to explain that here in a moment, and also how you may be able to capitalize on that. So let's get to it. First of all, so much of what I've been doing has been really a matter of using the Dow as a touchstone, meaning using the risk environment. Now, it's not only the Dow. I've been watching the shift in the Nikkei, which right now is probably the biggest laggard of the different indexes that I watch. I've already seen a transition in the FDAX, that would be the DAX, or you take a look at the EWG, you can already see the transition in the DAX, the German DAX. We can even see the transition in the Chinese large caps. Again, the Nikkei is probably the laggard, but even that has transitioned out of its downtrend. We just see more emphatic examples of uptrends when you look at the S&P or the Dow, and this kind of follows through with the analysis that I sent out the first week of January, meaning when the market finally starts looking for not just safety, but yield, that capital will end up in the U.S. And this had a lot to do with the outflows from China. This had a lot to do with the issues in terms of what was happening with the German economy and the Chinese slowdowns. What happens to that capital when it starts looking for both safety and yield? And I mentioned the U.S. equities markets would benefit the most, and I think we're seeing that absolutely pan out. But what happens now? Take a look at this chart clear back to July of 2015, and you see that area that I've highlighted, calling it breadcrumb highs, and where I expect the selling pressure to build. The first analysis that I try to do before I apply even technical analysis number one, my wave, my grab, anything. What I try to do is visually scan the market to simply see where it's been before. That area that I've highlighted has everything to do with recent highs, breadcrumb highs, going back approximately 1 year. Now, I could add a second layer in here with these breadcrumb highs. That would be a secondary layer based upon this right there. Yeah, it would be a secondary layer. But initially, my feeling was, and it still is, that as we approach 17,500, we're going to start to see a slippery slope. And I think the stops that we're going to start to run into, the stops that are going to prevent the market from going higher, or at least slow down the bullish momentum, are waiting about 17,550. I talked about this in the chat room this morning. So up until about this point, I've been risk on. Risk on meaning I want to buy COMDOLs and I want to sell yen. Now the timing matters because I don't mind turning into a yen bull. I don't mind thinking about reeling in my long positions in the COMDOLs, which is just another way of expressing the commodity currencies, COMDOLs, Australian dollar, Canadian dollar, New Zealand dollar. I don't mind reeling in some of those long positions once I find an area on the Dow that justifies doing so. When you trade the yen, you've got to watch the equities markets, namely the Nikkei and the Dow. So if I'm watching something like Australian dollar, Japanese yen, I've got a yen short, but I've also got an Australian dollar buy. meaning this is very much a risk-on position. This is one of the popular carry trades. This is, again, buying a COMDOL that would benefit in a risk-on, selling the yen. A lot of traders that are new to currency trading, whether you're trading currencies through the Forex market, through futures, through options on futures, or the currency share ETFs, what we do is currency trading at Simple Forex. So the currency trading outlook is if the markets are heading up, in other words, we have the uptrend on the Aussie yen that's benefiting from risk appetite. Once the Dow reaches a resistance level, I've got to reel in that position. At least recognize that if the Dow rolls over, we're going to start to see the Aussie strength subside and the yen strength perhaps start to grow. That's when we start to shift from risk on to risk off. And I'm going to show you using intraday time frames. We're going to talk about this in the premium video, how I take advantage of rollovers intraday to, instead of focusing on the exhaustion levels on the ceilings on, say, the Dow, how do I look at an intraday time frame and set up, maybe even trade or use as a guidance trade, the rollover intraday. So let's talk about what I want to do now. My Australian dollar, Japanese yen, I want to start to reel that position in from the standpoint of I've hit an optional profit target. Let's move to a break even, and let's start being aware that if I start to stumble, if this slope becomes more slippery for the Dow and it starts to sell off, we got rejected at 17,550. That 550 level was something I was watching very closely for exhaustion. I'd like to, if I was going to be aggressive, start pricing some puts here, okay? Now, another market that I think I want to start pricing puts in, and by the way, you're going to see me use options in some of these futures contracts. I call these 4Extra. The way that I trade futures is from the mindset, from the paradigm of a currency trader. And I think about what the Dow means to currencies and what the Dow reflects in currencies. I think about gold as the currency of my favorite fictional country called Goldtopia. I know a lot of you have heard me refer to that. I'm not just trying to be cute. Gold behaves as a currency. So I start thinking about, well, where can I start to position myself in gold? And I think we're probably going to see a little bit more punctuated a pullback. I welcome it. I want to start thinking about either buying calls, or if we get down below or at 1220, I'll actually buy GC. Some of you can execute that trade via GLD. The one story that I think really was underplayed today in terms of what happened in Brussels, in terms of that terror attack, is the pound. And I think the pound is, we have 3 different short positions in the pound, all against different COMDOLs, Aussie, Canadian dollar, Kiwi. The reason the pound, I believe, was the main story was because the Brexit conversation takes on another level of, if this is what's happening in Europe, and UK voters are going to go to the polls in June and they see what's happening in Europe, you might get a little bit more interest in separating from the EU. And I think anytime there's something negative going on in Europe, that's also going to create a sell-off in the pound because it increases the chances of Brexit. And right now, the uncertainty and or increased expectation of Brexit sells the pound off. So we hit profit targets easily. Actually, not just our first, but our second profit target. So we have a 90-40 short that just crossed over the second profit target at 87.05. We're going to continue to manage this trade. I'm going to talk about how I'm using hourly PMRs to manage this winner. So what I want to just emphasize here, and I know this free video is a little longer, but I think it's very important. It's easy to kind of lose sight of where we are in the Dow because of just the other stories that impacted psychology today. And the thing I want to reiterate is if we are going to see a correction, not a reversal, but if we're going to see a correction in the Dow, I think it starts with kind of waking up the sellers, waking up the bears that are kind of laying in wait at that 17,550 level. If I get another push higher to that level, I'll probably try to build a decent little position with some puts. And then as we move down lower, I'm going to start thinking about what the layers are of support that I could rebuild a long Dow position and rebuild my risk on position. So what are risk on positions? I'm going to get into that in more detail in the next video. But again, I know this video ran a little bit longer, but I really want to make sure everyone knows what an important juncture we're at and what that means to certain currency stories. So let me just give you this. Perhaps be a little bit more cautious about COMDOL buys. Perhaps think about where yen buys may suit your trading strategy. This is the time to consider them. Not 2 and 3 days ago, not yesterday. Now I think is when we can start to think about the timing on those yen buys. Also, think about British pound shorts. Okay, that was one of the big plays today. British pound shorts. 2 currencies that I'm leaving out. Yes, I'm sidestepping the US dollar, and I'm pretty much sidestepping the euro as well. And I'm going to continue to do that. I really want to sidestep the New Zealand dollar for the most part as well, but I've got an older position in the pound Kiwi that I'm managing, so that's not a new position at all. Think about what risk off could do. How could you get opportunistic on a pullback, and what does that mean right now? If we were, don't start jumping ahead, but if we were to roll over, how would you capitalize and how would you protect yourself?